All right, it is Friday, August 18th, about 30 minutes after the bell, a little bit after that. Let's go ahead and take a look at the price action for the indexes this week, and what a week it was. Most of the indexes, again, we'll be starting with the NASDAQ, had some kind of major breakdown. We'll be talking about that today, starting with the NASDAQ, of course. So on Monday, we had this pop up, looked pretty good for a potential move back up off of this 15,000-ish level that had held before a few times, and then we got the flush down, right? So kind of had talked about there were a few potential buy levels in here if this thing was going to end up moving higher, and we do see that it broke those levels. We kind of talked about 15,000 even being a pretty key level that really needed to hold, or we were going to be talking about filling this gap or touching the box last week, and that's kind of exactly what's happened. So it's Friday. Today we got our move back down into this liquidity pool down here that we've marked with the box that is part of the gap on the NASDAQ, and it looks like it went just below the low of this wick that had gapped up to produce this move last time and then got bought up. Still potentially could be a reversal area for the NASDAQ, but we're going to need to see some more price action to confirm that. Right now, we could definitely still see lower. We could see this entire gap filled. We could see, and if that happened, we would see this level at 14,530-ish tested as well. And then there's the fib level down here all the way down at 14,300 and change. So keep those levels in mind. Still doesn't look great in the short term here, but we still think that this could end up moving higher. Price, do you have any other thoughts on the price action for the NASDAQ this week?
Yeah, I just wanted some context on that 14,500 level. Obviously, you can see it's where it gapped up, but here on the higher time frames, that's probably too high. The weekly, you can see how that's an important level in there. And price has come in and interacted with it quite a bit, so that's why we have that level there.
That's definitely a major level. And I think a lot of people will see that as, that's the bottom of the gap that we talked about and we've marked with the box. I think there'll be some orders there. We'll have to see kind of what happens if that level's going to hold, or if this was it, or if we're going to see lower. We'll have to kind of see what happens next week. But right now, just trying to find a new support to fuel the next leg higher. To be clear, the kind of bullish trend still hasn't been broken. I've already seen articles this week because of this move talking about, is this the recession that everyone's been worried about? It doesn't even look close to something like that yet. In my opinion, we'd have to lose probably this level down here all the way down at 13,600-ish to start talking about truly a bearish reversal, right? People are really discounting that this whole leg was, this just happened. So anything above this level, 13,600, still looks good. And the reason that we like that level is that that was the high of kind of the attempt to break out of the bearish trend before, and that broke out, was tested almost immediately afterward, and that produced this whole leg higher. So until that happens, things still look good for higher on the NASDAQ. Let's go ahead and move on to the S&P futures. Obviously, most of the indexes are going to look the same. S&P looks a little different, though, because it actually held this kind of key level that we've marked before. This is the last level that needs to hold for the S&P here at 4,380 before filling this gap down here and going down to 4,300 even. Looks like it's going to be essentially inevitable. Speaking on certain important levels, 4,300 is probably one of the juiciest levels on the S&P. This is, again, very much like the NASDAQ, marks the sort of the high that failed to break out during that bearish trend last year in 22. And so we've seen price kind of attempt to make its way above this key level before, and that's the level that held on the bearish side, and we want to see that level hold on the bullish side too. Now just below that, 4,200 and about 15-ish, 4,200 even you could call it, this was the level that had held during this whole consolidation period that actually produced the move up that allowed that level to break at 4,300. So that's another important level. Price, I think you and I were talking about potentially looking at buy opportunities if price made it here. These are probably the most obvious long trade position levels that you could imagine on the S&P 500. They look really textbook, and they look like they have great trading setups. What do you think about that?
Absolutely. I'm gonna be looking at this, like I said, Sunday afternoon, Monday morning. It may not happen on that time frame, but you know, you gotta keep an eye out with the futures. With that leverage, you gotta have a pretty tight stop, and so yeah.
Yeah, I mean,
it definitely looks like the
certainly
bounce
agree.
point. That's absolutely and you can see how it used to be all-time high over here. Leg up, held, another leg up. This is all-time high, I believe, right?
That's the leg that produced all-time high, yeah.
Yeah. So we really like this area here for support. This is the level to be looking at.
Yeah.
Nothing else on the chart matters except right now this level.
Yeah, and I think obviously we're not there yet, but to speak to why you're like saying, hey, I'm gonna be looking at this on Sunday. This is the kind of thing that you don't want to be chasing. You don't want to be waiting to kind of figure your order out the day that price makes it there. If that's going to be the key level that holds, then it's, everyone's probably thinking that. Everyone's looking at this chart, probably the same or similar chart that we're looking at, and they're thinking, wow, 4,300 looks real dang good. So if that's true, and everyone's got their long order there, price isn't going to spend a lot of time when it makes it there, right? It's going to get bought up instantly. So you need to have your order in already. Don't chase the trade. If you're like me and you're more conservative, you want to make sure you get your fill. You can place your entry level a little bit above the level, and just manage your risk a little bit, taking a smaller size to accommodate for that. But you don't want to be chasing a move off a level like that. It's going to be real quick. It's going to be a lot of volatility when it makes it there. That's kind of my opinion on that move. But it looks textbook. I really like 4,300. We'll just have to see if it can make it there or if it's going to hold up here. Let's go ahead and look at the RTY, the small caps. We had some pretty high hopes for this. Obviously, we've kind of talked about how it started to look really good for breaking out, and it has broken down again. But it doesn't look too bad yet. Obviously, this level, we wanted to see it hold around 1900. That would have been really perfect as a textbook bounce for a long toward 2100. But we got that broken down this week with all of the selling and the volatility. To be clear, there's still this level that we had marked before at about 1822, 1824. We'd kind of marked this out as a potential area for a great long if it came back here. We were off by a couple of points. It looks like, 1825. But that's still going to be a key area of support where if it needs to kind of hold up there, or if that breaks down, we're going to see it go back to kind of the lows of that range from this consolidation box at least. That's kind of my thought process. What do you think about that, Price?
I really like the weekly chart on this one. I'm looking at that right there. So you can see how this was the level that is needed to be gained, and it didn't here, but it did have a few closes. I don't know if that's a couple or a few, but price, price hung out up here, so that's why we expect these lows to hold and to produce higher, probably all-time high.
I would say if that level holds and we see that area that needs to break tested again and it actually breaks through, we're going to 2100 at least. Probably all-time high off of that, but it's not going to be a straight shot, but we'll have to see. I do like 1823, 1825.
Yeah, me too. And you can see on the daily that the daily trend was lost right up here. It came down and had this big wick. It tried to hold, but it couldn't. And that's why you get the wick on the reverse side after it fails. So this right here was a textbook daily short.
Yep. Yeah,
but
it's like
that's
literally the inverse of the candle 2 days before it.
right, right. And so that's why we're seeing what we're seeing here on the daily, but the weekly still looks good for catching a long.
Yeah, until it loses that 1825, 1823. Still looks good for higher. Let's go ahead and look at the Dow. Kind of similar to where the S&P was, right? For S&P futures, there was kind of this key support level that it went and tested and then got back up a little bit, bought up a little bit. Kind of see the same thing here on the Dow. We have this level marked here at 34,400-ish, around there. That's the level that it was tested today, got bought up. Could still see that level tested again, but if that level breaks, it's going to be a bit further down, right? So we're looking at about 33,300-ish there. That would still, it wouldn't look terrible on the bull case, right? It could still be considered because of these lows here. That would still be a higher low, but that's kind of the last area that we needed to hold up before it starts to look quite a bit uglier. We don't have a lot of support after that. We have this little level here, 23,750, but
I really like this level we're at, though. You can see how it was all-time high, got up above it, and it's just been sitting here fighting with it. But it very recently made this leg up, so we do really expect this to hold here because of all the.
That's the level it's been fighting with
come.
for over a year, so, or around a year. So it would make sense that that's a significant level. On the weekly, it looks, pretty similar to that, right? Even more obvious, right? That was the.
Right.
You can see it, all those touches there, and it finally broke above. If nothing else, we do have our closes above that level, like very complete closes above that level, so we know this was gained. It's just going to have to find support.
Right.
But we do need... This is like kind of the perfect level to see it hold, like you were saying. That's probably the juiciest long on this chart in a long time, but if that doesn't hold, we got quite a ways down, so just be careful. A lot of volatility these days. Let's go ahead and move on to gold. Gold, we kind of talked about looking textbook last week. I think Price and I actually disagree on this one a little bit. The way that I see it is that we really needed to hold at 1942 to kind of produce that textbook opportunity to create the next leg toward all-time high. We saw that broke down and closed below the level below that at 1924. We saw that just nothing but red candles this week, right? And even have this wicking that tried to come back up above 1924 and got sold off anyway, closed below. A smaller version of the same candle today, right? Tried to wick up above that level, closed below again. To me, that's not the greatest. For short term, I'm still very, very bullish on gold long term. I still think we're going to see all-time highs sooner rather than later. I think that you have a bit of a different take, though, Price. Why don't you go ahead and explain your thoughts?
Yeah, so on the weekly here, I still really like gold. And it's basically this level right here, 1974. The fact that that was gained on the weekly over here makes me believe that this level down here, and it's a zone for sure. But you gotta remember when I'm saying a zone, it's 1923 to, it's a $10-12 zone here, so it's a reasonable zone. I do believe that we'll see higher on gold before we see below 1900. I think 2000 is more likely than 1900, even though it's at 1917 right now. But that's, it could absolutely come back down to 1874 as the
yeah, and that's kind of
level.
my level where and again, we both think it's going to all-time high. It seems like we just disagree on the way that it's going to make it there. I think 1874 is the level to hold to produce that support level to create that leg. But we'll see.
What I see in here in this leg down is on the daily chart. I see all these tests and resistance touches. So you can see right in here, it actually gapped up and then went down, but it's going down while trying to test everything while it's going down. And when I see this, it makes me think that it's about to produce a giant green candle, because the only level that wasn't tested in this whole leg on the way down is the top level here, like right about 1993-ish. Everything else has already been tested on the way down, so it doesn't need to be tested on the way up. It can just print a...
Yeah, that's true. I think there would be very little resistance if
Right.
it moved back up. So to your point, that could easily happen. Yeah, we'll just have to wait and see.
Yep,
I still
next
think
week will be fun.
I think we're both agreeing on the direction, just not the difference of opinion about where the level needs to hold to produce that leg. But we'll have to see. Let's go ahead and move on to oil. Oil has had some tradable setups. This week actually had a nice little kind of dump down into the 79 range here, which we've seen was kind of a level of consolidation, breaking above that key level at 80, right, and then coming back down to test those same areas at 79. Did so again on Wednesday and Thursday, as well as earlier today, to produce a move that closed up over 80 again. So to me, oil looks good for higher. We've kind of been waiting for something like this to happen on oil for a while. It's just been consolidating. We finally got our move, pushing it out. On the weekly, that's 4 closes on the weekly above that level at 80, so that looks really, really healthy for a move higher. I don't even hate, I don't like market orders, but, if you feel like this was the last leg to kind of get in at 79s, I don't necessarily hate a market order right where it is. You could put a level below 78 and target the next area, which is about 93. That's just off the top of my head. That sounds like around 5-to-1 risk to reward. Not terrible at all.
Are you calling for a gap up on oil?
I'm not calling for a gap up. I'm calling for a move up on oil. Probably in the next, couple of months, I could see these, weekly candles moving on up. Although this range is one where a price does move very quickly, right? We've seen that in the past, big candles. So anything could happen. I just feel like this many closes above that key level tells me that we're definitely going to see 93.5. I'm very confident of that. I'll even go as far as to say that. It's not financial advice, but I'm confident in my TA. What are your thoughts?
I like this $80 level, just like you were saying. We can see how important it is, and you can also see how it closed above that $80 level and then held, and again, you gotta look at this with a grain of salt. That technically did produce a new low, but let's look at it. The low was 63, 64, and over here it was 64.36. That's actually really interesting.
Yeah, looks good.
So it's not far apart, and so that's my point. Is it gained that level, held-ish the low, and that's why we're seeing what we're seeing. And on the, I believe it was the monthly, yeah, you can see the same thing happening here, closing up above that level. So
that'll be really interesting to see if the monthly candle closes above that level too. Obviously, considering what we both think about the weekly and daily levels at 80, it looks like we could see a monthly close above there. That would just be another check mark in the bull camp for seeing 93.5 on oil for sure. 2 closes above on the monthly is a pretty strong indicator that we're going to see higher.
Right. Yeah, pretty quickly I would expect 102 after that.
Yep.
Whatever that is, 103. That's more 103. Anyway, that's
cool. No, I like your analysis. Let's go ahead and look at the dollar.
Okay.
All right. So I've been kind of talking about me personally thinking that this, well, both of us, but I kind of went into detail why I really like this 103.6 level on the dollar index last week, and we do see that this week we got a bit of a couple of touches there, right? One yesterday and one today, a little bit wicking past, but getting sold off quickly after that. So, I think that this could very easily hold up as a significant level, and potentially reverse back down. I'm not going to call where exactly it will go. I did kind of share my thoughts that I think it could go down to kind of retest the lows of the last move, but we'll have to see if this holds up. I will say, and I think Price, you kind of touched on this as well, and I'll let you elaborate on that, but we think if this level fails to hold, we could easily see 109 in the future, not too far in the future even. What are your thoughts on that?
Yeah. So we can see, and we like, it's kind of our catchphrase that we need to see more price action, but we can see right here that this is the level to hold because it tried to hold, and then it tried to gain here, but it did not keep going up, so it had to go lower before it could continue up. So
Right.
we're back at that resistance, and if it gets gained, if it is gained, moving forward here over the next couple weeks, that's a really big signal for it to be retesting these areas at 109, 110. That, and it's kind of a signal that this is the floor of this move.
Yeah, if that breaks at 103.6, that's certainly what it looks like.
Mm-hmm.
The reason that I am big in like a short thesis on this level too is the fact that we actually did get our 2 closes above here on the weekly, but because you would have wanted to see that hold around here and not break through this level, right? This kind of other support level that we had here at 101.5. The fact that this produced a new low off of this move means that now it has to actually try and break back through that level and gain it again before we actually confirm to see higher again. So as long as this is in here as a lower low, then I just see this as potentially the key level that needs to produce a lower high to fuel the next leg down. Until that breaks, that idea is still intact.
Right.
Let's go ahead and move on to KRE. Banking sector. What an interesting week. Kind of a, like everything else, we had a bit of a breakdown here, but it actually held up at our level. It's a little bit below, and it did close below, but we kind of had this trade idea that we'd placed here. And that actually, theoretically would get filled. That we're not taking this trade for real, but so we're in this idea of this trade that we had before, and the idea is that would need to kind of hold here and not break below this $42 level. If it broke below that, then we're starting to look a bit spooky. Let me kind of adjust the chart there. Sorry about that. If we break below this level at 42, then there is not a whole lot of support in the way until the next leg lower, right? These are all tested, essentially. So it would be pretty spooky if $42 did not hold. That would be kind of the yikes moment for banks. But it could hold below that at 41, but that's not a significant enough level to kind of be confident about it. That's kind of my opinion. I think that this is a great level to kind of buy up and see the next leg higher. We've kind of talked about how until we see a breakdown there, it does look good for higher at 56.5. We're looking on the weekly, it still looks really good, right? It still looks like a pretty cleanly defined higher high, higher low. So until we see a new low, like a lower low, it still looks good. What are your thoughts?
Yep, very similar. We like this level because of this interaction here, as well as further out to the left, but that doesn't matter quite as much. But you can absolutely see that this level has been significant, very significant. So the fact that it's fighting over it makes a lot of sense. We would want to see it hold it on the higher time frame. On the daily, you can duck underneath it and get back above it, because you're respecting the higher time frames.
Yeah.
And that's what we would expect to see here in the next few days if it's going to hold. Otherwise, it'll retest these highs here. But like you said, it is still a very good leg up, and on these time frames, you can still see there's plenty of support in here. And I'm gonna go ahead and make that green.
Yeah. All
Solid.
those should be green at this point.
Yeah.
Price is above it. So, yeah. I don't think that this, I'll just say this. I think since the last couple of weeks, we've seen a lot of, red come into the market. People are already streaming about recession. We've had these huge moves up in the market for the entire year. If you have a couple of weeks of red, that's, first of all, totally normal. You can't go straight up. It's totally normal and to be expected pullbacks. All we do is look for the next leg that can hold produce the next leg higher. While everyone's freaking out, you stay calm and, rational. Stick to your TA and just trade the charts in front of you. Don't listen to all these articles that are telling you what to think.
Mm-hmm. And of course, the very most important thing is understanding your risk. So if you're like entering a trade and you're like, I don't know if this is gonna hold, I'm gonna lose all this money, you're trading wrong. You need lower
Definitely.
risk. You need to be able to enter a trade and not worry about what's gonna happen to it. If you lose it, if it goes away, if you get that stop, hey, it's okay. So if you're in a situation where you're getting really worked up over is this gonna hit, then you need to reevaluate how much you're putting into your trade and your stop loss and take a step back. That's my advice.
I completely agree. You need to get to a point where you don't care about the money, which is kind of a counterintuitive thing, right? That's what trading is.
Right.
You're trading for money. You're trading for profits. Everything you do is in money. But that you have to treat it like numbers. A game.
Yeah. You need to be more wrapped up in being right. And it's okay to not be right, but you just want your ideas to play out. And if that's all you're really looking to do.
Yeah, I think one of these days we'll do like a video on the side that isn't the review that just discusses market psychology. I think that you and I have a good strategy and head on our shoulders about that, so maybe people will be interested in that. But as far as the review is concerned, we've gotten a little off topic. I think we're pretty much done. It's been an interesting week. We'll have to see what happens next week. Thanks again for tuning into the Trader Hub Weekly Market Review, guys. If you like this kind of content, go ahead and sub to the Hub and consider joining our Trader Hub Discord community server. You can find it using our link in the description. And hope to see you there. Have a great weekend, and we'll see you next week.
See you next Friday.